Good morning, and thank you very much for joining us on Business Review 2025 as we look at the economic stories that shaped the year 2025. Well, on the 7th of January 2025, a new president was sworn in at the time that Ghana was at the crossroads with inflation over 20%. Many of you asked yourself the question, what would this government do to transform the Ghanaian economy? Well, they had come into office with lots of promises. They talked about scrapping what they termed at the time as some taxes that were not necessary, including COVID-19, betting tax, and others, but most importantly, ensuring that the average Ghanaian became better off. Well, it's been 11 months getting into 12 months. The question is, what has happened in 2025? Well, for us here, our focus is on the stories that shaped the year. My name is Winston Amwa, and I get to do this with So it's Winston and Winston. We're trying to tell you what happened in the course of the year. Before we get into a discussion of all of these events, and it's important we start with the appointment of Asiamah Forson as Finance Minister by President Mahama in January 2025. We'll do it this way. We'll start with issues on a quarterly basis. Well, by the end of January, still in the first quarter, the President had appointed Dr. Johnson Asiamah as Governor of the Bank of Ghana. In February, the President delivered the State of the Nation address and then told us the 8 pillars that he was going to use to transform the economy as in the reset agenda. Take us through, Winston Taki.
One of the 8 pillars is that he was going to complete the IMF program and ensure there's prudence, discipline, and compliance on some of the conditions that IMF stipulated to Ghana. And secondly, it says they're going to reopen the domestic and international capital market, followed by strengthening sovereign funds and local government financing. They went ahead to say they promised to clear verified areas and rationalize public investment, which they've been working on for quite some time now, and accelerating public financial management reforms, and also revitalizing exports through the bank, through Ghana Exim Bank. They also ensure that they are going to build into regional hub for trade and investment, which is something they will involve most of their conditions, which they're going to start in some parts of the regions. They are also in plan to resume infrastructure development to stimulate growth, and we've seen that with their big push agenda.
Well, let's talk about other happenings in the first quarter. We know that the Ghana Goldbod bill was passed in Parliament, and that many have said was the game changer. Still in March, by the end of the first quarter, we know that the Finance Minister, Asiamah Forson, had presented his budget to Parliament, and in that budget, he scrapped the betting tax, electronic transfer levy, emission levy, VAT on motor vehicle insurance policy, and 1.5% withholding tax on winnings of unprocessed gold by small-scale mining. So when we get into the second quarter, well, at the end of June, what we saw was that the Ghana cedi had appreciated by 42% against the US dollar, and 33% against the British pound, and 25% against the euro. Now, this was the period where we saw the Ghana cedi doing very well, at the time becoming one of the best performing currencies globally. Then, by the time we get to the third quarter, still within the second quarter, but by the time we get to the third quarter, we realize that, well, the Governor of the Bank of Ghana, having been appointed in the first quarter, is in the news, talking about some of the measures he's put in place. But before we get into even the third quarter and the measures he had put in place, in the second quarter, he talked about the fact that he's played a major role in ensuring that we preserve the cedi's true value. So let's get into the third quarter, okay? We saw Goldbod expecting over 4 billion inflows before the end of the year 2025. That's according to the Governor of the Bank of Ghana. And this is important for a number of reasons, because what we experience today, many believe we've had a favorable commodity market. That is not in doubt. That has also contributed to the Ghana cedi's appreciation. Now, the Bank of Ghana's gold reserves increased by some 4% to 34.4 tons in July in 2025. And if you look at the fact that today, gold has become a store of value, it was important we're actually increasing our gold reserves. Look, by the fourth quarter, Ghana had recorded single inflation for the first time since August 2021, as September 2025 inflation rate fell to 9.4. Today is at 6%, and for the first time, many of you have begun asking the question, okay, so we know that inflation is going down, but what's the impact of inflation? How come I still do not see lower prices? I'm sure by now you may have been told of the fact that we know that the prices of goods and services are increasing at a reducing margin. a bit confusing. We'll explain all of that to you this morning.
Yes.
But today, we know that some 10 billion Ghana cedis, $10 billion has been pumped into the economy as a way of shoring up the Ghana cedi. So we ask a simple question: who are the change makers of 2025? Who are the people who've helped transform the Ghanaian economy? What are those stories that has helped shape the year 2025? When I return after these messages, I'll introduce my guest and then we'll start the conversation.
Do in the name of the Almighty God swear that I will at all times well and truly serve the Republic of Ghana in the office of, and that I will uphold, preserve, protect, and defend the Constitution of the Republic of Ghana as by law established. So help me God. We will take the last one, which is the oath of secrecy. And again, when I say you mention your name. And then when I get to holding the office of, you say First Deputy Governor, you say Governor. Okay, so we go. I holding the office of, do in the name of the Almighty God swear, that I will not directly or indirectly communicate or reveal to any person any matter which shall be brought under my consideration or shall come to my knowledge in the discharge of my official duties, except as may be required for the discharge of my official duties, or as may be specially permitted by law. So help me God.
Welcome back. This is Business Review 2025 as we look at the economic stories that shaped the year 2025. We've been sharing some of these stories with you. And as I indicated before the break, that I'd be introducing my guest. In studio with me, CEO of Dalex Finance, Joe Jackson. I will be joined by Professor Peter Quartey via Zoom, as well as Francis Timoboy also on Zoom. Joe Jackson, good morning. Thank you very much for joining us.
Good morning.
How are you doing?
I'm good. On a scale of 1 to 10, today is a 7.
Oh, today's a 7?
Yes.
Well, these days 7 is not, 7 is like a B or B plus.
It's not too bad.
We expect an A.
I'm an old man.
You're an old man?
Yes.
You're very stingy with marks. But look, before we get into the stories, and we've been talking about the stories, these stories actually includes appointment of people, an appointment of people that may have played a role in the economy that we have today. Let's start this way. For you, let's look at the people or the man of the year when it comes to the Ghanaian economy. Who's that man or maybe men that have helped transform this economy?
Listen, if I had to nominate men of the year, just like we do for Time or one of those, we don't have it in this country. But without doubt, 2 people stand out. And I would nominate men of the year.
Okay.
One is the Minister of Finance, Dr. Atukasi Forson. The second will be the Governor of the Central Bank, Justice Asiamah. Without doubt, in my mind.
Why without doubt, these 2 men stand out as men of the year for you?
Listen, any improvement we've seen in this economy over this year, and you're talking about the things that have shaped, you cannot take away the discipline that these gentlemen have exercised and the balancing act that has taken us to where we are. These 2 men have chosen discipline over populism. And what they have wrought is not a miracle, It's just stability. But look at how different the numbers are today.
Okay.
And it's just the two of them. I would, without doubt, vote them as the two men of the year where the economy or even this whole country is concerned. Can you imagine the pressures that they are facing from their own party financiers who have arrears with this economy? Some 60 billion of arrears that is sitting there. Can you imagine the pressures from ministers, pressures from without? I'll give you an example.
Please do.
Today, we heard that the country has lost access to the Millennium Challenge funding. And we've lost the access, one, because we defaulted, but mainly because there's some USA-based companies that within the framework of our debt default, we refuse to pay. Now, it would have been easy to say, this is the USO, let's pay.
But if you can't pay, you can't pay.
Yes, but you could have made an exception so that but these guys have exercised discipline, commitment to fiscal responsibility, commitment to prudent. And listen, for me, all we have to now pray for is that this discipline that they've shown, this commitment that they've shown should continue.
Why do we need to pray for a continuity of something that you say they have done so well? What's the fear?
Oh, the fear is this, that as the pressures mount, as even Ghanaians expect more, right? They may some time further down the line keel over to the pressures that they're facing. If there's anything we must do, we must support them. And I urge obviously they couldn't have done this without the support of the president. I urge the president to continue to support them so that they can, you see, we were in an economic mess. There are no easy decisions to be made. And we could argue endlessly about whether this decision was right or this decision was wrong. We could, because each one comes with its own drawbacks. But they have maintained, they've walked a very tight rope, right?
Okay.
And it's easy to sit in a corner and lambast them. You've pumped 10 million to support the city. Was it right or wrong?
Was it right or wrong?
It depends on how much risk you are carrying.
Okay.
It depends on how much we needed the city to stay stable.
I know that for you at Dalex Finance, and before you continue, I know that for you at Dalex Finance, you've always talked about allowing the city to find its level.
Yes.
Where we are today, is that the city's level?
Of course, it's a balancing act. And I would say that we are below the city's level.
Okay.
I think the city is slightly overvalued. Not slightly, I think the city is still overvalued. And over the coming months, I expect the city to rise slowly to a higher level.
As in the dollar?
The dollar, city to dollar value. When we talk the city is overvalued, it means the dollar is too low.
Yeah.
And so we expect the city to, the city to dollar rate to come up over the next few months. But remember that there are several considerations there. You're talking about the size of our debt and the payments that have been made. Remember, every CD rise in our debt has every CD rise in the dollar rate has implications for our debt.
Yes.
Huge implications. Has implications for the money we pay out. So listen, I won't sit here and tell you that it's easy. I won't sit here and tell you that it's a balancing act. You may not agree with them, but you can't dispute the overall numbers. You can't dispute that they have kept the discipline and brought inflation down to the single digits.
We'll get into the inflation bit, but let me just say that we've been joined by Professor Peter Quartey. He is the the director of the Legon Center for International Affairs and Diplomacy, immediate past director of the Institute of Statistical, Social and Economic Research, and Francis Timaboy is a tax expert, all joining us. Good morning to all of you. Thank you very much for joining us.
Good morning, Winston.
Good morning. Good morning, Winston. Good morning.
Great.
Your panel members.
Great.
To your listening listeners.
Great.
Winston, I want to say a special hello to Dr. Korte.
Okay.
Yes.
Good. Stay with me on the inflation bit because we need to delve into that. But before we delve into inflation, because the general concern with many Ghanaians, even as we talk about the fact that inflation is at 6% now and is being the best in years, they say, but I don't seem to feel it. We've been trying to explain that it's the rate of increase that has been reducing, but they say, still, I don't feel it. So I'll get your take on that. But let me get to Professor Peter Korte, because you've talked about the men of the year. You say the governor of the Bank of Ghana, Dr. Johnson Asiamah, and Dr. Kasiel Forson would be your men of the year because of how they've succeeded in stabilizing the Ghanaian economy. Professor Peter Korte, if I were to ask you to do same, for instance, because the appointments are also part of the year. The appointment of Dr. Kasiel Forson and Dr. Johnson Asiamah, how would you say these two have shaped the Ghanaian economy? Would you agree with Joe Jackson that they are the men of the year?
Listen, can you get your technical men to enhance the volume a bit for me? I'm struggling to hear. I can hear you, but I
okay.
Really
so if you can hear me now, I am just asking you that Joe Jackson says for him, his men of the year would be Dr. Johnson Asiamah, the governor of the Bank of Ghana, and Dr. Kasiel Forson, the Minister of Finance, for the work they've done in stabilizing the Ghanaian economy. Would you agree?
Well, I agree with him to a large extent, but I also would like to acknowledge that it's a teamwork. There are other ministers, including the president, who all work together for us to achieve what we are seeing now. So, yes, in as much as they have led these very important portfolios, which I agree, we shouldn't gloss over the fact that others helped in achieving the stability that we have seen. We've also shouldn't gloss over the fact that we had the IMF program, which was signed earlier, and that is also helping us achieve the stability we are seeing. So, kudos to the two fine gentlemen. If they hadn't continued the IMF program, I believe we wouldn't be seeing what we are seeing now. But of course, I acknowledge all the efforts they put into what they are doing. The coordination, especially. I mean, if the two of them don't speak, if the Minister of Finance and the Bank of Ghana do not speak the same language, it's a recipe for disaster. And I see that coordination between the fiscal and fiscal. That is helping a lot in achieving the stability that we've seen this far.
Well, Professor Korte, we always say that the buck stops with the leader. So if the buck stops with the leader, why can't the leader also take the credit? After all, any failures would be, would stop with these two persons, wouldn't it?
Well, certainly. That's what I said. It's a collective responsibility. The leader, of course, is the leader of the team, and then the president, that's the president, and then all his ministers, able ministers who have worked together this far. But of course, the two are the ones that are really at the factory stage, if I should describe it that way. They are the ones getting their hands dirty. So we must acknowledge them very much for what they have achieved. There's still room for improvement. I wouldn't say that we should be celebrating the stability and just relax. There's a lot of room for improvement. As you stabilize, as you ensure that you're not spending, that has repercussions on people's pockets. Because the government spends, that is how money finds its way to the economy. That is how you stimulate aggregate demand. I believe by now, some foot soldiers and party faithfuls and all others have started agitating that, hey, you need to spend. So let's ensure stability. Once you're stable, it's like an aircraft going to take off. You taxi first, and then gather momentum and take off. So as we stabilize, we should be getting ready to take off and grow and ensure that we find money in people's pockets. So we can celebrate improved livelihood, we can celebrate improved working conditions, we can celebrate our streets getting better roads, getting street lights, better waste sanitation, and many, many others.
Okay. Let me bring in Francis Timoboy because, I mean, and I'll start with you on this same note. The people that you think are the man, whether it's a man or men of the year, Joe Jackson is giving it to 2. Who stands out for you this year?
So, listen, I think that I agree with Joe Jackson and then Professor Kote, but I will want to extend it a bit further. Because these are economic matters. The economic management team, of course, we have the commissioner there, and then the minister there. So the went up, divided the street well, and the economic management led by now.
We're struggling to hear you. Kindly reposition yourself for me so we can hear you.
Is it better now?
I think it's better now. Please go ahead.
Okay. So I was making a point that we can extend the performance to the economic because the vice president, the minister for finance, they've done it well. But when the sustenance is the key test. Yes, they've done well. The question is how long is this discipline?
Okay.
Because we've seen some of these, earlier performance for the past conference. We saw the early test did some great work. Then 2-3 years down the line, the performance dropped. So for me now, there was done the well. We work.
Okay, Francis, can you hold on for me, Francis? I think we need to check your connection again. But let me come in studio because Professor Peter Quartier makes the point. Joe Jackson, he says, well, we're under an IMF program. You hear Francis Timoboy also make the point that we've seen these things before. Now, that raises few questions about the sustainability of this. And earlier, you also talked about the fact that, well, from next year, sometimes the pressure becomes too much. How sustainable is this stability that we're enjoying today?
First of all, let's celebrate the small gains that we have. And one of the things that I'm always advocating is that these same people, if things went bad, will be holding them up, will be stringing them up, will be drawing and quartering them. So when things are working, let's give them the benefit. Because if things go wrong, I will come and sit here and I'll be singing a different tune. So number one, let's celebrate the wins that we have. That's a positive thing to do. Because with celebrating them, we are reinforcing and saying, this is good behavior. Keep it up. Is it sustainable? It's a tough one.
Why is that tough? Why can't we sustain it?
Listen.
After all, what works for you is what you do.
You see, we are between a rock and a hard place sometimes. Because not spending might also be putting a brake on our growth.
Okay.
And as a nation, we are impatient. We are in a hurry. We want roads fixed. We want schools built up. Is
it your view then that in ensuring this stability, government isn't spending much?
It's not spending much. And it's not spending much because I'm not in their minds, but from their behavior, you can see that they're far more concerned about inflation than anything else.
Okay.
And bringing inflation down and making sure that we are so well behaved that we can start to restore investor confidence so that we can start to go back to the markets that we were shut out from. Remember that going to the market is not a bad thing. what makes it horrible is what we use the money for. But if you're going to go to the market and use it for productive stuff, use it to bridge our infrastructure deficits, then we're fine. So at this moment, I acknowledge the balancing act. I acknowledge what they have done with inflation. I acknowledge what they've done with the currency and say it is, from where I sit, the biggest benefit is that looking at Ghana now, it starts to retain some of the attractiveness that we had a decade or more ago. And we can start to attract investor confidence. And we can go back to the markets. First of all, remember that we are not even still doing local bonds. We're still doing T-bills.
Yeah.
That's definitely not sustainable. And it is only restrained behavior and good behavior that will get investors go back and then start to subscribe to Ghanaian local bonds after what the DDEP did to us, the Domestic Debt Exchange Program.
Okay.
Right? Same thing for outside. So, from where we were, staying on the straight and narrow was absolutely important. We had to do that. We didn't have a choice.
Let me bring in Professor Peter Quartey on this inflation bit, because, you know, the whole conversation about not spending, you've made the point that government has been concerned about the rate of inflation. But as we go into the next year, now at 6%, yes, but of course, Professor Peter Quartey, as much as we have tried to explain, the question you hear all the time is that, well, prices of goods and services are still increasing. Some still argue that these prices are high and that the rate of inflation is not what they feel. Professor Peter Quartey.
Right. Before I touch on, let me quickly make a point about the stability.
Sure.
Ensuring sustainability of the windfall, or the sustainability of the stability we are seeing. One, I see leadership, I see the Minister of Finance, I see the Governor, Dr. Forson, and Dr. Asiamah Johnson, and even the President, and quite a number of them. I mean, what I hear, what I see, the poster I see is that they want to leave a legacy. And if what they have said, they go by what they have said, then, of course, they will work towards attaining or maintaining the stability that we are seeing. That is, if they stick to their words, then certainly there will be stability going forward.
Okay.
But we should also be minded that we are riding at the back of a windfall. Gold prices were around $1,800, less than $2,000 an ounce. Now it is roughly over $4,000.
Yeah.
So there's a lot, and even cocoa, a lot of windfall. And if we intentionally invest this wisely, all this windfall are invested wisely, then there's going to be sustainability. But if we don't, we all know what happens when commodity prices tumble. It crashes the economy. So the point is that we are riding at the back of a windfall, of course, with some good governance, but let's ensure that we invest these resources carefully.
Okay.
My other concern is our usual behavior, the political business cycle. Now we are not close to elections. Close to 2028, are we going to see the same behavior? Are we going to see leadership who wants to leave a legacy, or leadership that wants to win elections? So those, for me, are the points that we need to balance carefully. I cannot give you an answer whether leadership will change its behavior, but we should be careful and rather think about leaving a legacy. And once you leave a good legacy, people will vote for you. Now, with the point about inflation, inflation doesn't mean inflation figures dropping, doesn't mean prices are not increasing.
Sure.
What it tells you is that we are not increasing fast enough, but they are not increasing at the rate they used to be. But obviously, prices will go up. And it depends on where you find yourself. It's like rain. When you rain in your area will be wet. If the kinds of goods and services you consume see a decline in price, then you are benefiting from the decline in, or the fall in inflation. But if the kind of commodity in your food basket doesn't see significant drop in prices, then you are likely to say that I'm not feeling it in your pocket, in my pocket. So it depends, but there's relative stability. Everybody can attest to that. Food prices have been relatively stable, and many other items that we find in our basket have seen some relative stability. So overall, I'll be surprised to hear that I don't feel it in my pocket at all. We do. We do feel it. Not that, except that not at significantly or not at the level we expect. We all want lower prices. Interest rates, we want even lower interest rates than we are seeing. We want lower food prices. We want rent to be lower. We want our fuel prices at the pumps to be much lower than we are seeing. So that's for my take on this. Thank you.
Great. Now, before I get to Francis Timoboy, I would like us to do this. This is a business review. We're recapping the major economic stories that shaped the year 2025. I want us to do this. Let's just go for the passage of the Goldbod, because Professor Quarter, you talked about commodity prices. You mentioned gold. I want us to do it this way. Let's go for the passage of the Goldbod and look at the impact of the Goldbod in 2025. How has that contributed to Ghana's economic story? We'll also bring you the announcement of the first policy rate under this administration. Let's go for them, and then we'll come back and continue with the conversation. We're also live for on Joy 99.7 FM.
Variable is the inflation rate. And the rate where it is now at 23.1, it should have been somewhere around 17%, if I'm right, Director of Research, by now. So you see how much we have to cover to be able to stay on course. The Monetary Policy Committee considered these, and in our view, also looking at the liquidity injection that occurred last year, we need to get busy with those. The next reading for inflation will be critical, and we will be guided as to the future direction of policy.
Mr. Speaker, this is a landmark legislation. And those of us who have sat through the night to this morning to pass this historic legislation should be proud of ourselves. That we have vindicated the trust and confidence that Ghanaians repose in us. Mr. Speaker, indeed, the 24-hour economy has started in this chamber.
This is still Business Review, where we are recapping the major economic stories of 2025 that actually shaped the year. We're live on Joy 99.7 FM. In studio with me is Joe Jackson, who is CEO of Dalex Finance. We have Professor Peter Quarter joining us on phone. He is the director of the Legon Center for International Affairs and Diplomacy. But of course, you've always known him as a professor at the Institute of Statistical, Social and Economic Research at the University of Ghana. He is the immediate past director. Francis Timoboy is also a tax expert joining us. Before the break, I talked about the fact that we're going to focus on Goldbod and its impact in 2025. But before we do that, let me just get to Joe Jackson about inflation again, because you have a point you want to make about inflation. Please go ahead.
The point is, inflation is a statistic that's been politicized. And it's also a notoriously difficult concept to pass on to the man in the street.
Really?
Yes. And it's very simple. It's simple, but it's like this. Suppose I have a drug, right, that I buy every month, and it's 100 cedis. I do have a drug that I buy every month at 100 cedis because I'm diabetic, so I buy metformin. And in 2022, it was 100 cedis a month. That was the amount I had to take every month. At the end of 2022, inflation, let's say, was around 50%.
Yeah.
So end of 2022, this drug is now costing 150 cedis. Now, in 2023, inflation comes down to, oh, nice one, 30%. It doesn't mean the price of the drug has fallen down. It just means that it's only increasing by 30% of the 150.
Okay.
So now it goes up by another 50 cedis to 200 cedis. Then
that's where the problem is actually.
Yes.
Because for that person who looks at it and says, oh, well, but in 2022, when inflation was at 50%, it went up by 50. And now that you say inflation is dropping, it's going up by 50. But I get you, because then the rate of increase is compared to the previous year.
Thank you. The rate of increases. But I just gave you an example where inflation has fallen, and yet the price has increased by the same amount as when the inflation was at 50%. So if you're the man in the street, you will say, last year it increased by 50 cedis from 100 cedis. You said inflation has now come down from 50% to 30%. This year, it's still gone up by another 50 cedis. You must be lying to me. But it's not that simple. And it's important for us to talk about the change in the basket, the change in prices from year to year, and we're talking about an increment. So even this year, if we say the inflation for this year, give or take, was even 10%, 8%, whatever, it means that over last year, there will still be an increase.
And you raise a very important point, because it's also important we even look, beyond looking at the items in the basket, you must also look at the weights on these items, because some carry more weight. And so based on the weight they carry, a huge inflation is likely to impact more than, say, if it had a lesser weight. So all of these would play a role. But you say that's because of how we have politicized it. And so we've politicized it in a way that creates a certain impression that may not necessarily be so, Joe Jackson.
You're right. And remember that because of the partisan nature of our politics, every time there's a little bit of good news, right, the regime will raise it up and flag it and dance about it and have a kinky party about it and stuff like that, which is politicizing something that is maybe strictly not that evident in the common man's pocket. Even today, we talk about stability. But you go out into talk to the shopkeepers. Christmas is coming, and they will tell you that life is still tough.
Yeah.
That people are not buying. People are not buying because wages have been lagging behind inflation, even at the low rates. People are not buying because excess liquidity has been drawn out from the system by keeping lending rates high and keeping. So, you see, it's not that simple. There are good things to be happy about. The stability we enjoy is excellent. But
it comes at a cost.
It comes at a cost. And it's going to take time before you start feeling that things are happening. What's the biggest thing that we've lost? Jobs. We've got stability, but it's not translating immediately into jobs. Remember that the Statistical Service tells you that between 15 years and 35 years, 32% of those actively seeking jobs don't have jobs. That's a horrendous statistic. It means our JSS graduates. It means our SS graduates. It means our university graduates. So things are tough, and the stability has not started feeding into jobs yet. To start feeding into jobs when the growth is realized. So, in truth, we were in trouble. In truth, this year has been a year where we have restrained, we have been disciplined, we have behaved ourselves, so that next year we can start to realize, we can start to run. Right now, we are just being lifted off the floor. Next year, this economy must move from stability into growth.
And let's look at the, talking about moving away from stability into growth. You talked about the policy rate at the time, but now we've seen, the policy rate cuts, which is expected to lead, and the rate of inflation is also good, so is expected to lead to lower lending rates. Let's talk about how that is impacted this year, but most importantly, will impact 2026 into 2027 if all other things being equal will remain the same or even lower.
Okay. You see, access to credit is critical. It is access to credit that helps our SMEs and other businesses to create jobs, to grow. Now, remember that over the year, until very recently, these rates have been high. And lending rates have been high. And lending rates are notoriously sticky, coming down. So, although the rates have come down, in reality, if you go to your bank, it's still very difficult to get the credit. It is those who don't need the credit who are most likely to get it.
Oh, why?
Yes, I'll give you an example. We need to fund agric. But agric is notoriously risky. And whether we like it or not, agric is still very much rain-fed rather than irrigation-led. And some of the windfall gains we've had this year is because the rains have been good. So if you want to fund agric, it is not just a matter of reducing the rates, it's a matter of subsidizing risk and making schemes like GESL, the insurance for those who lend to agric, much more accessible. In truth, we should stop subsidizing agric and subsidize risk, so that commercial institutions...
What's the difference?
Okay, the difference is this. If I'm going to lend to agric, and agric is difficult. Some years back, we gave money to farmers in the north. 5,000 farmers got money from Dalex. Rice farmers in the Tamale area. They harvested. They grew the rice came, everything. Then we realized that we didn't have access to combined harvesters. So what happened? The rice stayed too long in the fields.
Okay.
Fire set in. When they took it to the mills said the rice was too dry, and we could go on and on and on. So in the end, you're at a point where you will lose some money. Now, give a guarantee scheme so that we can afford to fund these farmers. Give a guarantee scheme so that somebody can go and fund corn, fund cassava, fund millet and maize and all the other things that we need to do for agric. Then, all of a sudden, you'll find the money flowing in. You see, it is not just simply the fact that the rates are low. It is that if the risk is high, financial institutions will be cautious.
Okay.
And will say,
So in effect, you'd have a lot of personal loans, but those who really need these loans to expand their businesses,
thank you,
because of the risk associated with their business, they may not get it.
They may not get it. So the rates have come down, but we need to ask ourselves, what are we doing to make access to credit feasible, especially for areas like agric?
Let me bring Francis Timoboy in at this point, because we're still talking about the impact of the policy rate. Now we have the policy rate of 18%, 18, and the general belief is that, look, this is great. It's a good figure to actually work around. But you say, well, that may not be a good figure if we do not reduce the risk associated with particularly agriculture. What do you say, Francis Timoboy?
Winston, just before, just a quick comment on the prices that is not coming up, coming down that you mentioned.
Sure.
I think that inflation that prices always that people price that they were running like today the prices are going like
Francis, I think I am losing you a little bit. There seem to be some breaks in your. If you could kindly reposition yourself, so we can have yes.
Okay, so what I'm saying is that just a comment on the inflation that you talked about.
Sure.
So today, when we say inflation is always that prices are not in the way that's not. For me, if prices drop, what we should advocate for the directive of exchange rate kind of man will tell it. $1 is amount when and now exchange rate is coming down, and therefore we should see that reflecting in low prices. Or whilst fuel price is coming down, things should go down. But you know the average Ghanaian man, he will not reduce the prices because he wants to take advantage of that. So some have argued that Pascal Service should be able to publish some indicative prices so that if I go to shop one and I realize that the price is high, I move away. Other than that, we cannot use inflation as a yardstick to expect prices to fall. Now, having said that, on the non-performing or the policy rate, I think one major thing which the banks always complain of is non-performing loans. Listen, we are in Ghana, people go for loan and they don't pay. How do you expect the bank to go for pensioners' money, to go for people's investment and come and give it to businesses, and then they take the loan and they don't pay? By all means, they will need to reprice their portfolio.
Yeah,
so in the end, you realize that
the bank is
policy rates and everything is going down. But because of the bigger factor of non-performing loan, we're still where we are, and interest rates will continue to be high. So I think that one major thing that needs to be addressed as a nation is non-performing loans. You go to some countries, and you can't take a loan and say you won't pay. No, you can't do that. But we are in Ghana where people go for loan, and they travel, they live, and then the loan becomes the burden of people who are now coming to borrow. So until we're able to address the non-performing loan, we can have policy rate dropping to 5%. So banks will want to continue to charge at a higher price so that at least they can recover the bad loans that they have given. Go to the microfinances. Some charge 4.55% per month. And if you are charging 5% per month, that on the annualized rate can be more than 60%. Okay. How would the micro business perform and survive paying interest rate of 60%? That is not normal. But all of these things are because of the non-performing loans. If people are able to honor their loans, I believe that the cost of credit will come down.
Okay. Let me bring in Professor Peter Quartey at this point, because the conversation, Prof, is about the fact that, yes, we've seen the policy rate going down and expected to lead to lower lending rates. But the challenge really is that the areas that you expect these funds to go into, they're not going into these areas also because of the risk associated with these areas or businesses. How would you say the policy rate cuts has affected the economy in 2025? Right.
We should have a quick one on the inflation point, and then
please do.
I will touch on it. You see, I heard my big brother, Mr. George Jackson, speak about medication or drugs and how prices are going up in the midst of falling inflation rate. He's very much right. Some commodities report increase in prices, but I'm sure the drug he's talking about is imported. Some also witness a decline. The inflation rate is an average. There are about 307 commodities that fit into the calculation, and with weight, food and non-food items pick the most weight. So it depends on basically what commodity or what item and the weight attached, as was being mentioned. So I think that could explain, But then, of course, the Ghanaian mindset as well. We people always want to cut in some claim. They have already bought the item and they need to cover their costs and all that. But if we make the system competitive, if we display prices everywhere, that will help. I sometimes wonder why we don't use even scale when it comes to food. We don't weigh our food items, vegetables, etc. When you go to many African countries, if you want to buy tomato, whatever you want to buy, there's a scale.
Yeah.
The way they tell you the price per pound, per kilo. But ours is basically depends on people's discretion and how they see you dressed and how they want to price it, depending on how you are dressed or where you are coming from or how they want to cash in. So there are a lot of things we need to do to make this economic variables translate into our lives. Then the point about interest rate. Yes, the policy rate, to some extent, is linked to the market rate, the lending rate, etc. But we say it is sticky downwards. It is sticky downwards in the sense that when the policy rate goes up, quickly you see banks adjusting. But when it comes down, the degree of adjustment is very slow, very low. There are several factors, of course, including the bank's own interest to make profit. But then the risk element is so high. The high default rate. If I take money, 100 cedis from a depositor, I have to pay back with interest. So if about 20% of those who borrow don't pay, and that's what we find in Ghana. You see a lot of people driving in sports cars, living in good homes. They use their mansions as collateral to borrow, but they don't pay. You take them to court, they might take you 4 years. Sometimes when you get judgment, to enforce the judgment becomes a problem. They can appeal, they use all kinds of tactics. It's quite frustrating. I mean, if you work with banks and see what they go through to get some of these judgments. So people are working free, they borrow from one bank to the other because we don't have a good credit appraisal system or scoring system where we can trade information easily. Yeah. So this affects the way they lend. Agric is one area we would have wished to see more lending to. I recall ADB, for instance, said they wanted to give up to about 50% of their portfolio to agriculture. That did not happen. At most, they were able to get to 23, 24%. Why is that the case? Agric is high risk, and the government put in the KSR system. But then that, again, did not solve the problem completely.
Prof.
There is regulatory...
Yes, but Prof. Korte,
to get this done. And that
Prof. Korte,
a big problem. Yes.
Professor Korte, we've seen, for instance, and the MasterCard Foundation has been doing something. Now, they come into the country, they assist these agricultural entities. What they do is that you have to show that over the period, yes, you're registered, you're formalized, you have an account, and you need to look at your cash flow. They know that, okay, this is how much you can get over this period. They give it to you at, say, 7% interest rate. And so far, the people who have taken these facilities have been able to repay them. They are repaying them. So what is it that our banks cannot do right? Because these are schemes that are being managed by our banks.
Yeah, listen, MasterCard, when we use the MasterCard to buy things, they charge us. So the profit they make, they have set some aside as part of their corporate social responsibility. So this money is no money they have borrowed that they are lending. And therefore, they can afford to lend at a lower rate, give it to the bank to lend at a lower rate. They don't make any loss. Unlike a bank that will have to borrow from depositors. Sometimes they take money at 10%, 16%, 18%. And they have to on-lend, cover the operational costs, etc. So yes, I agree. So when your interest rate is high, there's the likelihood that people will default.
Exactly.
That's established. Yes, that will be established. However, when you are comparing the two, we also have to be mindful that the source of the fund for MasterCard is zero. The source of the credit or the funds is zero because it's something they are taking from their profit and lending and giving to the bank to lend. Whereas the bank would have to borrow or take money from depositors and on-lend. And that is where the difficulty is. You have to pay interest on whatever deposit you are taking and also pay for your operational costs. But I must say, that there's a lot of room for improvement, because we also see the banks posting very high profits in the newspapers all the time.
Exactly.
Perhaps we also have to look at that and come down a little bit so Ghanaians can benefit from lower interest rates.
I like that point.
Fact, they were lending to government. They were not even doing proper bank intermediation. They were doing lazy banking, where they take depositors' money and then dump them into government bonds and securities. DDEP taught us a hard lesson, a bitter lesson, not to put all your eggs in a single one basket. That is how now we are trying to lend to the real sector. But there's a lot of room for improvement. Thank you.
Great. Hold on, Professor Peter Quartey, because we need to talk about the Goldbod briefly before we get to look at, the intermediation by the Bank of Ghana. It's another important thing we'll look at. But Joe Jackson, let's look at the Goldbod. I mean, the establishment of the Goldbod and how it's contributed to our economic story of 2025.
Listen, the Goldbod was a game changer because the Goldbod allowed us to reap maximum benefits from the tremendous increase in the price of gold on the international market. At the beginning of the year, price of gold was hovering in the range of $2,000. Now, it is at 4,000 and rising. And the two sides to it. One is that it's a commodity, so it's windfall earnings and may not be sustained as we go along. So we should be careful about how we use that money in a way in which we can, when times are bad, survive. The good thing is that a lot of it has gone to build up our reserves, to shore up the cedi. That is a good thing. The other side to it is that there's a strong school of thought that for so long as President Trump remains in the White House, because of his unpredictability, the price of gold will still be kept high because people want a sure hedge against the fact that you cannot really predict what this the regime in the US, how it's going to behave. So there are good sides. And listen, at this moment, you can't fault the Goldbod. But there are a number of things that the Goldbod should be doing.
Okay, what are those things?
First of all, we should clamp down on smuggling. And smuggling will be clamped down by data.
Okay.
So we should be tracking every single ounce of gold that is produced in this country.
And where it's produced, isn't it? Because there are concerns about illegal mining also contributing.
I'm coming here.
Okay.
You see, people undertake illegal mining because legal mining does not pay. If we have to look at this in a holistic manner, and listen, I'm one person to tell you, we must end galamsey one way or the other. But we have to ask ourselves, why is galamsey so attractive? Because doing things legally is not attractive. We must use some of the money from the Goldbod to provide equipment, legal equipment, access to credit, and formal artisanal mining communities so that we can start to regulate these guys and still make it profitable. And unless we are doing that side by side with the rates to burn excavators, etc.
How about we do it this way? I mean, let me just get your view on this, and I'll get to Francis Timo and Professor Peter Quartey. So the Goldbod would buy. They have licensed buyers. These licensed buyers, the expectation is they'll tell you where they're buying their gold from. Now, if they tell you where they're buying their gold from, it's also important because now you'd have to go through the Goldbod. Once they tell you where they're buying their gold from, you would know which entities have supplied this gold. The entities that they supplied the gold, in their books, for instance, what quantities did they say they produce? Because based on your production, you must pay certain royalties to government, certain taxes to government here and there. So where it does not correspond to the entity's book, you raise the red flag and begin to investigate where the gold is coming from.
I agree with you. Winston, what you're saying is nobody can contest this. But the issue is that we have an illegal mining issue. And we are undertaking illegal mining because it's not profitable to do legal mining. What about side by side with the task force, etc. that we're doing? Setting out a program to make mining more profitable.
So you say that part of the windfall we're getting from the commodity prices should go into the fight against illegal mining.
Yes. And when I say the fight against illegal mining, I'm not talking about the arming, the task force, and that's one side of the fight. I'm talking about looking at this community and saying, how do I get artisanal mining in a way in which it can work? How do I provide them to access to credit? How do I organize them into cooperatives? How do I give them proper equipment? How do I help them so that their mining will not destroy the, what do you call it? The environment, will not pollute the rivers. And it's a conversation we must have. The gun and fire has its place. But at the bottom line, we must also have a program that attacks and deals with these communities. People are not mining because that's the only alternative they have. These guys, some of them are victims. They are undertaking mining without any protective equipment. They are setting themselves up for kidney failure, for birth defects, for all manner of cancers. In addition, they are polluting the very waters in the areas that they live in.
Okay.
It cannot be solved only by the gun and the destruction.
Okay.
There has to be a plan. And there are other areas in the world, South Africa, etc., where there are some programs that seem to work. Artisanal galamsey is a problem across West Africa, across all of Africa. It is not a unique problem to Ghana. And there are other areas we can look at, particularly South Africa, where they've made significant inroads into organizing them such that illegal mining is reduced.
Great. Let me bring in Francis Timoboy at this point. Francis, the conversation about the Goldbod, I mean, Joe Jackson says that's a game changer. Many have said that's a game changer. But I guess the question would be, how is the Goldbod, beyond just taking the gold, selling them, contributing, particularly when it comes to illegal mining, dealing with illegal mining, and by extension, saving the country from an existential threat?
We brought a very big issue. Whilst we praise the Goldbod to be one of the most impactful extractive sectors in Ghana, 2025, there is bigger and very thick that with still not the illegal miners and the gold they produce. Where does it? Who buys them?
Tell me.
These are the questions that we have not been able to answer, because the expectation was that gold was going to set the state, the export book, everything produced in Ghana should go through the Goldbod. Yet every day we see the illegal miners producing, excavating here and there. And today you and I are paying for it. So for me, I wasn't surprised when the Ghana Water said they were going to increase the tariff. They can't, process the water the way it used to be. They have to expend more. And so we are all paying for it. The question is, where is the gold? Is it coming through the Goldbod and we don't know? Who are the excavators, the importers of excavators? The chemicals, I believe the chemicals they use to process gold. We don't fetch it like water. So there is a thicker issue that maybe as a country we will have to start asking questions. Where is the produce going to? And if we're able to answer that question, then we can either celebrate the Goldbod as doing fantastic job by, helping us get more dollars to stabilize the cedi, for which we are all, praising the Bank of Ghana and the Minister of Finance for. And so we're able to answer the questions where the illegal mining produce is going to. Maybe we'll be, shooting ourselves in the foot and thinking that we've bitten our tongue and we've gotten some nice meat that we are chewing. But it will be on the contrary.
Okay. Professor Peter Quartey, I mean, this has been touted as a game changer, not in doubt, but there have been questions about the legality of the gold being purchased. How would you rate the Goldbod's performance in 2025 as a contributor to our economic story?
I would align with the last speaker, Francis. That we need to have a comprehensive evaluation, appraisal of the Goldbod itself. Whether ideally they've achieved what they were set up to do, and whether we are also not, the source of the gold, if the illegal mining, the gold from illegal mining hasn't found its way into what they are exporting. I think that question has not been answered. But having said that, I think it's a very good establishment, an enhancement of the precious minerals the company or corporation. The kind of sanitization they are bringing to the market, for me, is very good. In the sense that you have all kinds of people trading in gold. They come in, they buy, they go through. Our both borders are very porous, and therefore they buy and then they go. We don't get really tax from it. The export revenue, the forex doesn't come to us. And the nation is bleeding profusely from the activities of such operators. So for me, this is one aspect that I think it makes the Goldbod a positive establishment.
Okay.
Export revenue, taxes, forest coming in. But then we also must note that the central banks are recently using gold as reserves. Sure. And therefore, that is what is also accounting for the increase, the windfall we are benefiting from gold. So it's not, we cannot attribute everything to the actions of Goldbod. They are doing a good job, but I think we should acknowledge the fact that now a lot of central banks are using gold as reserve instead of the dollar itself, and that is what is making us feel some stability within the market. But the major point is whether the gold we export excludes illegal mining, galamsey mining, and that question, once addressed, we can give them 100%. But at the moment, I think it's a good establishment. So far, so good. From what I hear, the leader, Sabijemfi, yes, is one person who also wants to leave a legacy. He knows he's a young person. He wants to learn. He wants to achieve a lot. So let's encourage him. Let's support him. But let's also ensure that whatever windfall we get, like Mr. Joe Jackson said, let's invest into addressing the menace of illegal mining. It's not something that we should gloss over. It's affecting our livelihood. It's affecting our health, and we need to address this as we benefit from gold exports, gold purchases and export. Thank you.
Great. When we return, I mean, what I want us to do now, is to talk about market intermediation, because it's something that you've talked about, Professor Quartey. Joe Jackson has also talked about it. Now, the Joy Research Desk has actually found out that in 2025 so far, some $10 billion has been pumped into the economy, just to make sure that, the Ghana cedi is stable compared to the US dollar. Let's listen to the governor of the Bank of Ghana talking about all of these issues. Then we'll come in studio, probably our last issue, to have a conversation about it.
market has been hit by some supply challenges, making it difficult for commercial banks to meet the needs of individuals and businesses over the past weeks. Some individuals have told JoyBusiness that there were challenges in withdrawing from their own dollar accounts. But the Bank of Ghana insists the challenges come about due to the fact that the commercial banks are trying to strictly enforce the laws covering foreign exchange transactions in the country. Some persons close to the Bank of Ghana have also told JoyBusiness that the bank has carried out its own investigations on these issues, and it has come out that most of these individuals are having challenges with documentations to aid the transfers and transactions. Another senior person with the Bank of Ghana has told JoyBusiness that the central bank has a duty to manage the country's reserves prudently. Therefore, it will continue to implement measures that will ensure that all the foreign exchange laws are complied with by all players in the banking and financial sectors.
This is Business Review 2025, where we're recapping the economic stories that shaped our dearest nation, Ghana. And joining me for this conversation, Professor Peter Quartey, who is Director of the Legon Center for International Affairs and Diplomacy, Professor of Economics. Francis Timobo is a tax consultant, and Joe Jackson is CEO of Dalex Finance. We've been talking about the Goldbod. We've talked about who actually shaped the year. We've talked about the monetary policy cuts and all. But it's important we talk about market intermediation, because something we've all been talking about one way or the other. But the point is, at what stage do we allow the cedi, and at what stage do we say the economy is doing well, so our exports are enough for all the dollars that we need, so that the Bank of Ghana or the government doesn't have to keep looking for dollars to pump into the Ghanaian economy? Let me start off with you, Professor Peter Quartey, because we know at some point in time the Bank of Ghana was telling us, okay, this month we're looking at pumping $1 billion here and there. Some have argued that, look, it's good when you do it at this point, now that we have some space to do so, but this isn't sustainable in the long term. So how about building the fundamentals, building the structures of the Ghanaian economy? Well, that sounds like a cliche, but that's what we've said all the time. What do you say about this, and how do we deal with this particular situation going forward?
Well, let me take this opportunity to say that, yes, I am the acting director of Legon Center for International Affairs and Diplomacy, but I remain a professor of economics at ISE.
Sure.
ISE is my base, and I still remain a professor here.
Sure.
I meet a lot of people asking me, why have you left ISE? I haven't left ISE. I'm still here as a professor.
I get that. Yeah. Sure.
Okay, so back to the point. I think the Bank of Ghana established or their mandate is to ensure price stability. Mm-hmm. So inflation, exchange rate, interest rate, and also to promote growth, economic growth. That is why they work hand in hand with the fiscal authorities to ensure that they both ensure that growth is achieved. Now, this announcement and this intervention certainly aims at ensuring price stability. Exchange rate is linked to so many things: poor prices, food prices, rent, many other things. And therefore, if you don't ensure stability in these variables, people's livelihood will be threatened. So intervening as and when necessary, I think it's very important. We have to intervene on our exchange rate market, because we have a floating system. It is more of a managed float, and therefore regular intervention is key. I've heard in certain corridors that the IMF says they should announce anytime they want to intervene, so that it helps the market also prepare. But the point about sustainability is key. Central banks are now using reserves, gold, to shore up their reserves. That has enabled us to increase our reserves by, so many billions of dollars and import cover quite stable. But I ask the question, what happens if gold becomes less attractive?
Tell me, what happens, Professor Peter Quartey? Tell me what happens.
Yes. What is going to happen? So that's where the thinking, the planning should be, that in as much as we should be intervening, we should also be reserving money, we should be saving, we should also be thinking about investing to grow our real sector, export, diversify our export, and export in other commodities as well. When we export, that is when we get more forex. So if gold prices should go down today, because we have diversified so much into non-traditional exports, we will not feel that pain. Otherwise, there will be stagnation if we don't diversify economy. If we rely so much on oil, we rely so much on gold, and commodity prices, we all know, can flip-flop at any point in time, that will create problems. So it's good we're having this windfall, but let's invest the windfall efficiently in areas that will generate exports.
What are these areas? Professor Quartey, talking about investing the windfall in areas that would generate growth, in areas that would generate more forex. What are these areas you advise we invest in?
We see, even our traditional export, cocoa, for instance, cocoa production has been going down. What can we do? We need to invest more in cocoa. Some of the lands are being taken by illegal miners, etc. That is where I think reforestation, trying to ensure that we replant cocoa and not just export raw cocoa. We should be processing a greater proportion of cocoa by now. These are the areas I'm talking about. Non-traditional exports, actually, and many other areas.
But Professor Quartey,
other key crops. That's where the investment should go.
Okay.
Yes.
But these things that you talk about, and this will not be the first time you're telling us this. You've said this over and over again. So what's the problem? Why aren't we seeing these things? We keep talking about them.
Yeah, I think there's lack of, in Ghana, we have a lot of fine policies. We talk about them, yes, that is true. And that is what we have to do. But when it comes to investing in them or implementing, that is where we lack. So the point is, we cannot stop talking about them. We continue to speak about them. The need for implementation. If you pick any of our budget statements, you go back for the next 10, 15, 20 years, you find a lot of things listed. Agriculture, irrigation, whatever. You find a lot of things listed. You find government pumping money into some of them as well. How efficiently are we utilizing this fund? That is where we should be looking at, ensuring that all the things we say in the budget statement, in our medium-term strategy, we invest money, we put money into them. But more often than not, we are not able to raise the revenue, and therefore we don't invest. We only pay wages and salaries. We don't even pay enough for goods and services. We pay workers who go to work, but they have little to work with. And therefore, we don't generate enough resources or income. That is the challenge we face. So, more revenue, invest them in the areas that are critical to generate export revenue. And by so doing, we are diversifying the economy.
Okay. Let me bring in Francis Timoboying at this point because, well, some would say, and Professor Peter Quartey makes the point, it's part of the functions of the Bank of Ghana, but others also say, why don't you allow the city to find its own rate? What do you say?
Into a point where we allow the dollar cedi equation on autopilot. And like what they said, we leave the demand and supply and they let the club find its own way. We're going to have a very crash because the way of our economic strategy is not something that can be allowed because we do more commodity and commodity export is not something you can do for long. but people have even projected that the gold price is going to fall in the near future. So if Bank of Ghana is able to pump dollars into the market today because of, more money windfall coming from the gold export, the question is how sustainable can this be? So until we're able to diversify the economy, like Professor Kote has said, we always want the Bank of Ghana to intervene, and it's part of their function. They are supposed to ensure stability. So during our conference, we were advocating that, look, tourism is one way that government can really focus and say, this year we are dedicating a lot of resources to tourism. The year of return brought over $3 billion. So why can't we hammer on such things? Yes, Professor Kote has said a lot, and we keep saying it, that let's change the way our economy is. Don't depend too much on commodities, because tomorrow something can change at the world market price, and then you are on your knees. So as we speak now, yes, we are celebrating, but the economy has not developed into a position where it can withstand any shock. Anything can happen, and then we are on our knees, and then the exchange rate will just go back again. So diversification is something that we will have to focus on. And some of us have advised that tourism is an area which is so easy to develop. Ghana being the first country in sub-Saharan to gain independence. We have so many tourist sites. What can we do to bring down hotel costs and all those things, transportation to those sites? How can we improve upon them? At the end of the day, you realize that we even be getting more than what we get from some of our commodities. But we'll continue to expect that Bank of Ghana will intervene as long as they can, if the dollar is available. So far, we hear they have done over $10 billion, and we'll continue to. The businessman does not care where the dollar is coming from. All he needs is that he can get the dollar, and if you don't get the dollar, by all means, the price will go up. So there's a lot of work that we need to, and we cannot continue to focus on the commodity-based economy. Let's focus on our manufacturing sector, things that we produce in Ghana, that we consume most. Almost everything we buy, we import it from China. And how can we help the manufacturing sector to at least even bring down their costs? All of these things are discussions that government can say, this year's budget, we are dedicating it to this, and we are focusing on that. Then at the end of the day, we can, narrow down on some few sectors that can help our economy diversify rather than, the natural resources, which are not largely dependable. They can change tomorrow, and we are on our knees.
Thank you very much, Francis Timoboy. Joe Jackson, market intermediation, we're back to it again, finally, and we wrap up with you on this. How sustainable is this? Based on the fact that, like we all agree, commodity prices could fluctuate, and in one instance, you may not have the dollars.
First of all the benefits that we can get from this intermediation process seem to be short-term. See the appreciation, increased reserves, managed inflation, because remember that keeping the price of the CD stable has a positive effect on inflation because prices don't go as high. All the drawbacks we talk about are long-term. Is it sustainable? Doesn't it distort our policies? Is it distracting us from real changes that we have to make? And what if there's a crisis and our prices crash? Every drawback is right. So for so long as this remains short-term, and whilst this is going on, some of the money is put aside to fix the long-term benefits, we should be okay. But I have a slightly different approach from what Honorable Professor Kote and my other colleague have talked about. You see, today as we sit, Ghana has a trade surplus. If you take the total value of exports and you take the total value of imports and you strike the difference, exports value exceeds imports. The problem is that when the money goes, too little of it is retained in this economy because we don't own the economy.
Sure.
And even if we bring manufacturing and improve manufacturing, and it follows the same process of shipping out the profits, we'll be back to square one. One of the things we should be looking at critically is how do we ensure that we own this economy? How do we, listen, take my sector. How many of our financial institutions are Ghanaian? We will be declaring profits, and they are declaring huge profits. Where are the profits going to go? They're not going to stay here. They're going to go back to their home country. We have, in our extraction sector, we have local content laws. We are not enforcing them. So we are buying everything, sometimes even water, from outside.
Okay.
I will always remain a patriot where this economy is concerned. I will always say, let's find ways to get us to own more of this economy, to retain more. You see, why is Goldbod a game changer? Goldbod is a game changer because Goldbod starts to retain a greater share of gold in this country.
Yeah.
The same way Cocoa Board was a game changer until Cocoa Board's finances fell apart. So I agree we should fix cocoa. I agree we should go to tourism. I agree we should fix the manufacturing sector. But if we don't fix it, encouraging local ownership, we'll be back to square one.
Indeed, we'll be back to square one. Joe Jackson, CEO of Dalex Finance, thank you so much for joining us. Thank you, Professor Peter Quartey. Thank you very much, Francis Timoboy. That's all time would allow us this morning on Business Review, where we've been recapping the major economic stories that shaped 2025. We'll try and do a part two. I'll go look for time and do a part two because we've not spoken about the 2026 budget and how that can transform the Ghanaian economy. We've been live on Joy 99.7 FM. My name is Winston Amwa. Do have a lovely day. If I don't see you again, Merry Christmas and Happy New Year.